hotel in Morristown. They came to visit recently.
Oh, really?
A couple months ago. Okay.
If I have your attention, let me get an oh yeah.
Oh, yeah.
If I have your attention, let me get an oh yeah.
Oh, yeah.
Ladies and gentlemen, I want to welcome you guys to the New Jersey Real Estate Investors Association. My name is Elijah. I'm going to be opening up for you guys today, slightly expressing a brief background about the club, and then we're all here to learn about cash flow. Say cash money on three. 1, 2, 3.
Cash money.
Now, before we get into any of that, one thing that I always like to do at our events before we start them, whether it's 5 people or we sometimes have hundreds and hundreds of people at the events, we like to raise the energy. All right? And the way we raise the energy, first of all, we've all been working all day. We've been taking care of responsibilities, family, friends, business, whatever. But we're all here today with one common goal, and that is to have a deeper understanding about financial intelligence. And in addition to that, to meet the right people that you can go in on deals with, that you can connect with, and that you can grow with. Would you agree? Yes?
Yes.
So what we're going to do is I'm going to count down from 3. When I count down from 3, I'm going to have everyone stand up, and you got to give 4 people a high five, a little butt tap like this, okay? You can do a little foot tap, elbow dance, whatever you're feeling. But you gotta get 4 people and you gotta express one positive affirmation with them, okay? Let them know something that's of a positive affirmation, whether they're handsome, gorgeous, wealthy, abundant, sexy, whatever you're feeling. It's on you, okay? So, any questions over that? Sound fun, yes?
Yeah.
All right, I'm going to count down from 3. You guys are all going to stand up, give 4 people a high five, share the positive vibes, and let's go. 3, 2, 1. Woo!
Over here. I got a high five over here. Hey, how you doing, man? Doing great. Thank you for coming. I know you're very well established. Look like you're well adjusted to society.
Here's an affirmation for you.
All right. You guys have some fun with that, yeah?
Yeah.
Share some good vibes with some good people? Yeah. So just to let you guys know, I heard a few of your sexies out there. There has been one couple that got married from these events. So, if that happens to be you, just remember who started that for you. You're welcome, okay? So, thank you. Come on, round of applause. So, with that being said, whose first time is this here at one of our events? First time ever? Okay, so the majority of us. And for my returning members, my prime members in the room, make some noise for me. Woo! All right, word. So real briefly, I'm going to express to everyone who's new just kind of how this is going to run. And then we're going to get Nick up here. Nick's here tonight to teach us about cash flow investing. We've got a really awesome topic, and he's going to be sharing a lot of up-to-date information that you can't just find through Googling, that you can't just find from, looking on YouTube. Like, he's got a lot of experience that we're going to be expressing today. And I'm going to be in the back taking notes, so it's going to be a really good class. And I'm excited. You excited for that? Say, oh yeah? Yeah. So tonight's event is one of our general meetings. Okay, we have a few different styles of events. If you're brand new here, I want to welcome you. In order to come back to our club, though, it is required that you do join the membership. This is the only thing we're selling. We don't even really make money off of it. We use the funds from it to really help cover the events, the cost of it, so we can continue doing the events. So what is the membership? What's included? We have 2 different styles of events. How many different styles? 2. We have tonight's event, which is our general meeting. The general meeting is where we have a specific topic that's being discussed. Tonight's cash flow. So tonight we're going to be going over everything that's related to the BRRRR strategy, house hacking, how to buy cash flow properties, and any questions that you guys have, whether it's how to get started in it, or even how to scale it and get hundreds of units in your portfolio, which our speaker has done, and he has a lot of people in his circle that has done far beyond that as well. We're going to be able to cover all those topics, just we need you guys to ask those questions for it. Okay, so we have the general meetings, we have cash flow events, we have fix and flip events, we have wholesaling. Anybody here interested in wholesaling? Finding sellers that are ready to sell, putting on a contract, signing the contract, and then fix and flip. Anybody here for fix and flip? Word. Anybody want to buy a property, renovate it, and sell it retail on the market, make some nice dollar signs with it, right? So we have a bunch of different general meetings every single month. The topic changes, and sometimes the speaker changes. Sometimes we'll have 2 to 3 different speakers up here. As of right now, Nick's kind of coming back and speaking because a lot of things in the market are currently changing, and there's a lot of people who aren't telling you guys what's really going on. And so Nick's job to be here today is to share with you guys what we currently see in the market, and much more importantly, if you're brand new and you're wanting to do your first property, what's the best strategy for you to do it so you guys can get started with it. Okay, so we have these general meetings, and then in like every other week, so we have 2 events a month, and every other week we have either a general meeting or our next event, which is our Shark Tank. So on the count of 3, I want everyone to do a shark bite in 3, 2, 1. Who pointed their fingers? Oh, you guys did this. I couldn't see your underarms, so I thought y'all was just like this. I'm like, what are you guys doing? Do that again. Shark bites on 3, 1, 2, 3. Nice. Okay. So what Shark Night Deal Night is? It's an event where we have wholesalers in the room, we have licensed real estate agents in the room, and sometimes we even have people who own homes, like homeowners. They come up in front of everyone in the audience and they pitch their deal to everyone in the room. Okay, they let us know the details on it, they let us know why it's such a good deal, they sell their deal, and then as soon as they're done pitching it, we go to the audience asks the first question, we kind of get to go through the deal together, figure out if it makes sense or not. And then one of the best parts about deal night is that we also have a panelist up here, typically a local investor, we'll sometimes have a lender, and sometimes a local contractor as well. And they'll kind of get to say the final thoughts on the deal, and they'll kind of complete the due diligence, because with real estate, I'm sure everyone knows about due diligence. It's important to really go through that, know your numbers, know what you're getting into. And so as a group, we're able to do due diligence on a deal together and figure out if the deal makes sense or if it doesn't. So if you're brand new to real estate, you have no idea how to look at a deal, if you come to that event, by the time you leave, you'll know what the numbers mean, how they calculated it, how they got to the rehab numbers, etc., etc. If you're experienced, you want to be at that event, because if a deal makes sense, which typically at every deal night, there's at least normally one deal that's in the ballpark of making sense, you kind of want to be the first one to go out there and see it, bring your contractors in and get the offer in. Okay, so it works for both audiences, whether you're new or experienced. So to wrap this up, we have the general meetings where they're a lot more educational focused, plus the networking, and then we have our deal night. So if you want to come back to our club, it is required you to join the membership. The membership online is $197. So do you guys believe that if you have the chance to meet someone who is local, who is doing the business, meet some local people in the audience, make some good relationships, learn about how to use money better than you currently do you think it'd be worth it for a one-time payment of $197 to join a local community of people that are flipping houses in your own backyard? Yes or no?
Yes.
Okay, so like us all, who here likes to get deals? Okay, so at our live events, this is the only time that we offer the membership at a discount. Okay, so for today and today only, Greg and myself, everyone turn around, look at Greg. Greg, wave your hand. Say hello, Greg, everybody.
Hi, Greg.
That's big, handsome Greg back there. We appreciate you, Sensei. But Greg and myself will be back there at the end, and we'll be able to help you guys with the one-page form. So if you guys sign up tonight, we're going to give the membership for $100 off. So it's a one-time payment, $97. You have access from the day you sign up for a whole year to all of our general meetings. In addition to that, we don't only do these in North Jersey, we do these in New York, Philadelphia. So if you guys want to invest in Philadelphia with the single-family row houses, or they rarely have multifamilies down there occasionally, but if you're wanting to get into the Philadelphia market, we also have this club, and we also do deals down in Philadelphia. We also do these in the 5 boroughs in New York, and we have a huge audience of just people that are just like-minded people. All right, so that wraps up that. $97, it's one-time payment. Greg and I can be back there at the end for that. The second thing that I have to announce is Expo. We have an Expo coming up on November 12th. Is anyone here registered for that at the moment? No one in here is registered for that?
Has anybody here been to it?
Has anyone here been to the Expo?
Yeah.
All right, would 2 of you maybe stand up and share just briefly, 10 seconds, what your experience was like? Vlad first.
Oh, it was like, I don't know, 200 people, if I'm not mistaken. So many sponsors must go to the event if you're looking for partners, looking to raise money, looking to learn. It's an awesome event. There's like 50 speakers. I lost track of running back and forth to all the rooms. So definitely must go to that.
Word, appreciate that. Anybody else want to share?
Yeah, sure. It's a real legit convention on all different types of levels, whether if you're just starting out on the beginner, if you've been in the game for a while and you're like, intermediate, or if you're really advanced and you really want to get into the pulse of the market, know the trends and the logistics of the advanced level. It's something for everyone, and there's all different types of panels and workshops going on at once, and it's definitely well worth the visit and the time, and I had a blast. I made so many connections, so many sponsors, so many connections and networking going on, and it's just a significant event of the year to really attend. You don't want to miss it.
Thanks, Greg. Now, how much did I pay you guys? How much did I pay you? A lot of money, right? No, I'm just kidding. So just briefly, we have November 12th, we have our full day educational event coming up, 9 a.m. to like 4 p.m. It's a full day event. We're gonna have like 20 to 30 different speakers there. We're gonna have 20 to 30 different vendors. And like, I think at the moment, we already have like over 200 people coming, and or like 150, 200 people coming, and we're literally still a few months away. So the expo is a full day educational event. One of the things that we require from the speakers is that they're not allowed to upsell. So they're not coming there to sell you guys courses or programs. They're there to provide you guys education and value that you need, which that's very important, because a lot of events that you can go to, they can be upselling, which is nothing wrong with that. But at our events, we just don't do it. Okay? So the expo ticket, by the day of the event, the tickets go up to $125 here in New Jersey. I think as of right now, because we have so many tickets sold, and there's like a few left, I think the tickets are around like $75 right now, or 100. What are they at, Nick?
We're not selling that much right now. We're like early on, we sell them really cheap, and then about a month before the event, we raise the ticket prices like crazy.
So what are the prices now?
You can give it to everybody right now for $10.
Cool. All right, so the tickets are $75. You guys can pay me $75, and I'll pay Nick $10. Okay? No, I'm just kidding. Tickets for the expo are $10 right now. So whether you're a member or you just want to go to the expo, you can get your tickets for $10. If you have a friend that you want to sign up, you can also do that tonight. We'll just need their name and email, and we can help you guys in the back of that. If you guys join the membership, okay, for $97, we're going to include the expo ticket with it for free. Okay, so you get the year access to all of our events in New York, New Jersey, Philadelphia, and you'll get the New Jersey Expo on November 12th for free. Sound good?
Technically, you're not going to do that anymore, but you already said it. Because we already hit over our minimum for that.
When you guys don't see me back here, just know I'm off riding my motorcycle in the wind. Okay? So, any questions over any of that? Yes.
Where's the event being held?
It's here, isn't it?
Here.
Right
Yeah,
next.
it's at this exact hotel. Basically, we take up the whole area.
Yeah, so it's right here on November 12th. Any other questions over any of that? Going once, going twice. Sold. All right, so look at your neighbors on the left and right, give them a high five and tell them they're awesome. Now everyone look at me and tell me I'm awesome. And you're awesome, all right? So we're going to wrap this up. If you guys have any questions about the events, where they are, I would encourage you guys to either write this down or take a picture of that. If you want to know about the New Jersey events, where they are, etc., New Jersey, REIA.com. If you want to know about the New York ones, New York, REIA.com. And if you want to know about the Philadelphia events, Philadelphia, REIA.com. Okay? The final thing before we conclude this and get the Cashflow event started, we have our website, superiorinvestors.com. Just kidding. There was something that flew in my throat. You guys saw that, right? Okay, so let's get ready to get into our topic tonight. Cashflow investing, ladies and gentlemen, you guys ready? Yeah. Okay, I need everyone to do a drum roll, please. Use your feet, use your hands, use your mouth. Do the drum roll. Let's bring up the second most sexiest man in the world, because I'm the first. Let's welcome to the stage, Mr. Nick Tan! Come on, baby!
Thank you, Elijah. He's always entertaining. Before we start, can you guys make sure that the camera's recording?
Greg, this is you.
Yeah, it's recording.
Okay, it's recording? Okay. So just to give you guys a heads up, we are recording tonight's event. We've made many attempts to record the last few events, and there's always some error, and for whatever reason it doesn't work out. But I will tell you that if you guys enjoy tonight's event and you give us a review on Meetup, we will send you a copy of the recording. Okay? That's assuming that it's successful. Along with that, I've been recording events, my presentations for a long time. I've been speaking for like 10 years now, and I've recorded pretty much every presentation for the last 10 years. And if you ever saw some of my first presentations to today, you'll see that there are minor details that change, And the biggest change though is really just the numbers. You know, 10 years ago, a 3-family in Elizabeth, I could buy them for like 150, 200,000. Today it's 600,000. You guys follow? Yeah. But if you really look at it, the rent also changed. So as long as it's proportional and as long as it's able to pay for itself, it makes sense to buy. Okay, but the strategy and how you execute is really the same. If anything, the presentations today are just cleaner. Okay, better or easier for you to understand. But yeah, so I have this website called superiorinvestors.com. I kept all my recordings there for the last like 7 years that I did. The one prior to that I deleted because you couldn't hear me or whatever because again, equipment. But we recently got hacked. Okay, and so if you go to this website now, you'll see like nothing, right? But I just got the server like wiped out, and we're now gonna rebuild the website. And we're gonna put back all the videos. And so if you guys become a member, you'll also have access to all those videos. The crazier part is, I was thinking about this last night. I was like, because these are only 1 hour and 30-minute presentations, right? And I was thinking, because I have a lot of full-day workshops that I recorded a long time ago. This was back in like 2020, 19, and 18. And those full-day workshops, I used to charge like $100 a person just to attend them. And if you ever actually check out the workshops, they are worth a lot more than $100 because it's pretty much everything I've learned in that topic that I shared for that full-day workshop. I am really seriously considering just giving everybody the workshops as well. I have a workshop on pretty much every topic: wholesaling, buy and hold, fix and flip, every topic. And there's like at least 8 hours worth of content for every one of those topics. So like I said, if you guys become a member, we are building this site again, but because we are rebuilding it, I'm just gonna give all the old content that I have for free to all the members that are here. You guys cool with that? Okay. And by the way, who here is a member? And has anybody ever seen the workshop? You've never seen it? Have you seen any of the workshops?
I saw them when I first joined them.
Okay.
Yeah, they were good.
Yeah, but yeah, it's so
You give us the reruns for free.
Yeah, exactly. And if anything, it's like you know what the whole secret to this whole business is? It's like the strategies are all the same. It's just knowing the market. And because the right, like certain markets, if you apply like if you apply the right strategy in the right market, you'll kill it. You guys follow? It's like that. Like we just came out of a market where inventory is very low. Everybody was buying. Now we're entering a market where everybody's not buying. Right? Demand for real estate has actually skydived. Demand for mortgage applications has skydived. And so we just came out of a different. We just entered a different market. But the market that we came out of just now was the easiest market to make money in. Okay? But if you didn't apply the right strategy, it was the hardest. You guys follow? Because the market that we just came out of was a market where you could lock up a deal that's not a deal and wholesale it for $50,000 more. Because everybody wanted to buy. Right? But everybody was doing what? Looking for deals. And because you were trying to find a deal in a market where you didn't have to be a deal to sell it, it was impossible to find them, or very difficult to find it. You guys see what I'm saying? So there's different games, there's different strategies. But yeah, so that's the website, and I'm gonna have everything on there for you guys. As for tonight's topic, I was thinking about how to teach this topic because it's one of my favorite topics to speak on. And so I'm gonna give you guys some really different perspectives to it. Okay. So tonight's topic, the first half is gonna be on the BRRRR strategy, BRRRR, right? So I'm gonna write that out. I applied this strategy before I even knew it was called BRRRR. So in the beginning, I was like, what is this BRRRR thing even meant, But I was just doing it, I didn't know. I think in the last, 7 or 10 years or so, Brennan Turner coined it and it became popular. But I was doing this strategy before I even knew what it was. But what I do know also is there's many perspectives to how to apply this strategy. So I'm gonna share you guys a spectrum of perspectives so you can be successful with it. And then the second half, I'm gonna talk about house hacking. House hacking is really simple, so maybe I won't devote as much time towards that. But the bigger secret, I think, is in this strategy. And if you do this strategy with house hacking, it's even better. Okay? So let's start with BRRR. So the B stands for buy. The first R stands for renovate. The third stands for rent out. Fourth is refinance. And then the last one is repeat. Everybody got that? Yeah. Okay, but I'm gonna give you guys a crazy secret to this whole game. It has to do with more of the buy and refinance than any other part. Okay, that's the biggest secret to this game. Okay, so I'm gonna give you guys an example. So let's say you have $1 million. Okay, you have $1 million and you want to buy a Cashflow property, and it's for sale for $1 million. Right? You have $1 million. It's for sale for $1 million. The typical way a person would do this business is they would buy the property for $1 million. Okay? And let's say including renovations and everything, it comes out to be $1 million. Okay? So you'll buy it, you renovate it, and then you rent it out. From there, you then do a refi. Okay? So let's assume our all-in now is $1 million, and we're now at the refi. And when you go to the bank and you refinance, how much will the bank give you back?
70% back.
75% of what? 70%, 75% of what?
The actual value of the.
Actual value of the house. Everybody got that? Okay, so let's assume the actual value of the house is also $1 million after renovations. Okay, let's assume that. How much money is stuck within the deal? 250,000. Everybody got that? So because of that, for you to buy another $1 million property, what do you gotta do?
You need that 250.
You need to wait to free up to create another 250 to buy. Everybody got that? So that's one way of doing BRRR, and there's nothing wrong with that way. And I will tell you that there are markets where that's the only way to do it. Okay, meaning like downtown Jersey City. It's very hard to get a deal super discounted. And because of that, having some money stuck in the deal is very reasonable for the right market. But that's one way. Okay, go ahead.
How do you get the $1 million to begin with?
I'm just giving you the example. I can show you how to do this whole business with no money. I can show you how to do this with no money, and we'll get there. Okay, we'll get there. But we're good with this example so far?
Yeah.
Okay, so that's one way of executing BRRRR. There's nothing wrong with that way. There are markets where that's the only way. But don't sell yourself on that story, okay? Because like we do buy deals in Jersey City that our money isn't stuck. So what does the deals look like there? So in second example, another way of doing BRRR is we know the property's worth $1 million after renovations. Everybody got that? Okay. And we're trying to buy it, including renovations, okay, for $700,000. So we're buying, it's gonna be worth $1 million after renovations. We're buying it for $500,000, we're putting $200,000 in it. So we're in it for $700,000. And after renovations, it's gonna be worth $1 million. Okay? And once that's all done, it's rented out, and then we do a refinance. How much do we get back?
700.
We get back all the money we put into the deal. Okay? And that's the second way of doing BRRRR. Okay? That's, in a way, a poor man's way of doing it. But it's the right way to do it. Because a person that doesn't have access to a lot of money has to learn how to use their money in the most effective and best way possible, and that is to get it all back. Would you guys agree? Mm-hmm. Okay, and I'm gonna introduce you guys to, actually I don't have to introduce you guys to me. We got into lending recently, okay? And we will fund deals, purchase and renovations, okay? 100% purchase and renovations. As long as it's 70% of the ARV. So once it's fully repaired, it's worth $1 million. That's called the ARV value, right? So when you're buying it today, it could be worth like 500,000 or 600,000. But if you buy it for 500 and then you put in $200,000 renovations and it becomes $1 million, we will fund 100% purchase and renovations. And it's a 1-year loan, okay? It's a hard money loan, but our hard money loan is different because we'll fund 100% of it.
So
Okay,
what's-
so
what's
before I
the
go on
perc-
questions, go ahead.
Next question, so what is the percentage of your return of your hard money loan?
Yeah, so we charge, it depends on like your experience level. If you're like brand new to the business, we're gonna charge you like 3 points and about 12% a year, okay? But if you're experienced, we can go down to 2 points and we can even lower the rate down to 10%. It depends on your experience level. Also, yeah, and we're funding up to 70% of the ARV right now. That's it, go ahead.
How fast are you closing?
I mean, we can close in like 2 weeks. As long as title is clear, numbers make sense, we can do it. Other questions? Okay, so I'm
you,
sorry?
So you only provide the loans, you don't do other things?
Like fix the house?
Like partnership or...
Partnership? It depends. I mean, if you're bringing the money, I can bring the deal. But if you want me to bring the money, then you gotta bring something else than the deal, because we also have deals already that we're working on. But you can talk to me more about it. Okay, go ahead.
So how soon, like, so is there a penalty if I choose to refinance out of the phone liquor? Like, I pay you back in 4 months?
There's no prepayment penalties, no.
And you cover 100% of the purchase and the repair cost?
Yeah. That's normal. I mean, it's not normal with the purchase, but it's normal with repair.
Well, yeah, no, that's what I'm saying. Like,
Yeah.
90% is the best I've ever seen. So
I mean, if you want lower rates, you can put money down.
That's fine too.
Okay, so if you want lower rates, you just have to put money down.
Okay, I got it.
Yeah, we're very flexible.
So, again, can you please explain what those 4 are for? RRR, so buy?
Okay, so B is buy.
Okay.
R, the first R is renovate. Second R is rent out. Third R is refinance. Fourth R is repeat. Go ahead.
Explain a little bit why hard money loan would be good for the first strategy.
That's a great question. Yeah. So why would a hard money loan be good for a great strat to apply? So back to this gentleman Nico right here. He said, how do you get the $1 million? So if you find a deal like this already, did you need the $1 million?
No.
Okay. I'm a lender to give you that money. You see what I'm saying?
Yep.
Okay. Now, there's other hard money lenders. Feel free to use them. I'm just saying, this whole business, guys, the business in general is not about actually just making money, but using money correctly. You guys follow? It's about using money. Like, once you have enough deals going, and you have enough like proof of income and tax return, you won't need hard money lenders anymore. You're gonna go and start borrowing money directly from the banks. Okay? The hard money and private money become a joke to you because it's too expensive and it's not as flexible. You'll start getting lines of credit, or you'll get bank loans that are gonna be like 4 or 5%. Okay, and there's not going to be appraisals, lawyers, all these hurdles you got to jump through to just qualify for a loan. But from now until then, if you want to use hard money, you can. Okay. Go ahead.
I have another question. So for refinance, if we apply refinance from like traditional banks, Bank of America,
Yeah.
Wells Fargo,
Yeah.
they only allow to refunds for
Probably like 10
primary-
houses. Yeah.
primaries, right? Primary
That's easy.
residence.
Yeah.
But if we buy investment property, so it's gonna be very difficult to refinance. for the investment properties.
No, it's easy. It's easy.
So,
So we do those loans as well. I'll tell you where to get them. Like we do those loans right now too. They're called portfolio lenders, okay? Or they're called no doc loans. The guys that do no doc and portfolio loans, they allow you to hold as many houses as you want to hold. The only difference is that their rate is more expensive because it's lent by private money, meaning actual people's money versus bank money. Okay, so in terms of being able to refi, you can go to any of those lenders and you can borrow an unlimited amount of loans through those lenders. You can have like 100 properties or 1,000 properties, and it's fine. And they'll lend it to you, and they'll only look at it what's called the cash flow versus the mortgage payment. It's called DSCR loan.
Yeah.
Debt coverage ratio.
Yeah.
Right? So it's like based on the performance of the asset.
Yeah, it has to perform at least 1.25%. And as long as the properties perform that way, they'll give you an unlimited amount of those loans. And there are many different programs. There's like I would say 6 months ago, those rates were so low that they were willing to lend up to even a dollar for dollar, meaning it only made you $1,000 and it paid out $1,000. I mean, it only made you $1,000 and your expenses were $1,000. That's how desperate they were at that time trying to lend out that money. So in a way, they didn't even care if you made money on those loans at that time. This is like 6 months ago. Okay, guys, but do me a favor, ask me questions in regards to what I've covered. Okay, because I'm gonna go through all the other points. I'm just trying to make sure the most important thing you understand right now is there's two extreme ways to do BRRRR. One is your money stuck in the deal. Okay, if you have money or not, right? Whatever money you got, however you got that money, it's stuck in the deal. The opposite way, the total opposite, is you get 100% of your money back. And then actually the other extreme is you're getting paid. So when you do the refi, because let's say that $1 million example, it's worth $1 million, you got it for $300,000. Okay, and you put in 200 or 300, and now it's worth $1 million. But when you go do the refi, the bank's giving you back 700, but you're only in it for 600,000. You guys follow what I'm saying? Okay, that's the actual extreme. Okay, that's how the market was when I actually started buying cashflow properties, and it's crazy. Every time I refi, I would get paid. Okay, and here's the cool part, like you have to understand, people will say 100% financing is dangerous. It is, if you don't use it correctly. You guys agree?
Yeah.
Okay, so if it's not used correctly, it is dangerous. So in this example of $1 million, for example, right? If I know I'm gonna buy this property, I'm gonna refi and everything like that, right? I would, the rule that I follow is for every $100,000 I borrow, 6% interest only, I would pay $600 a month. You guys got that? So that's my rule. So like whenever I look at a property, I'm like, oh, this is $1 million property. Okay, $1 million property has $100,000 in there. So 10 times 600 is $6,000 a month. So that means that this property has to make more than $6,000 a month for me to consider buying it. If it doesn't, then I have to get it cheaper. So that way, I know when I buy it and I refi, it comes out to cash flow. Do you guys follow? Okay. Questions in regards to that? If any.
Where did that 6,000 come from again?
It's interest only payments. So
Okay.
it's like I'm just multiplying 6% into 100,000.
Okay.
Yeah.
Right.
I think it's actually cheaper. It's like 500 or something.
So
Go ahead.
for that refinance, do you have debt to income ratios?
Yeah, so debt to income ratios is a bank thing, like Bank of America, Wells Fargo thing. When you get into portfolio loans and no doc loans, they don't look at any of that. They look more at the property. But their rate is normally about 1 or 1.5% more expensive than the normal market rate. The best places to actually do refinances is credit unions. And so when I tell you that, that means that you won't be using us, okay? But I'm trying to share with you guys the best places to get your money. Credit unions are the cheapest places to refi with. Right now, the refi rate at like local credit unions are like 5.25, okay? And that's for investment property held in an LLC. That's really cheap. Okay, you go onto the web, look for no doc lenders. There are at least 6 something and up right now.
They also don't care about if it is a primary residence or.
It has to not be a primary residence. It can't be a primary residence.
Oh.
Okay, it's only for investments.
Oh, nice.
You had a question.
Yeah, I wanted to know if it was interest only, your hard money loans.
Yeah, they're interest only.
Okay.
Yeah.
How about other states?
We can do 50 states, but
Indiana.
like we can do 50 states, but we prefer to do like as close as possible to where we are, because if a loan goes bad, we got to go take the property and all that stuff. We're very new at the business, but our terms are pretty flexible, and the loan minimum has to be at least 100,000.
With the repair and the purchase together.
Yeah, but ideally more than that.
I have a couple questions. So if I'm interested, should I ask you these 6 questions now?
For the loans,
Yeah. or-
ask Greg.
Okay.
Greg's the gentleman in the orange or red. What is that? Let me continue, guys. We're good? Okay, so let's review this perspective. So on one side, money's stuck, right? On the other side, you cash out money on the refi. Refinance date. And then somewhere in between is like break even on the refi. Everybody got that? By the way, this is my first time doing this presentation this way. My presentations before were very different, but I wanted to share with you guys this way because I think it's better. So based on my experience, I found that it's easier to find deals where I can when I do a refi, I can cash out money and also get 100% of my money back is in what's called a C market. Okay? And in A markets, your money's gonna get stuck. And so what I'm saying is like the BRRRR strategy works in every marketplace. It's just the ability to refinance out all your money or not is more difficult in the different marketplaces. You guys follow? So for example, so what is an A market and what is a C market? And to me, an A market is a market that's very high income. I look at the income more than anything. Okay, so the median income for New Jersey is like $72,000 a year. That's the median income. The median income for parts of Jersey City is $250,000 a year. Like Newport, downtown, around there. That's $250,000 a year. So to me, in that, because the median income in downtown Jersey City is 2 to 3, it's like almost 3 times more than the median income for the state, I consider that to be called an A market. Would you guys agree? Mm-hmm. Okay, and so for you to be able to find a deal and cash out 100%, yo, if you find that deal, do it. Would you? Does that make sense? Just do it, because at worst case, you would just sell it, and you can cash out on that profit. So if you just break even on, like if I can just get break even deals in downtown Jersey City, I'll do it all day long. Would you guys agree? Right? And because it's very hard to find cash out deals to be able to cash out there, okay? And so worst case, I'll have money stuck on the refi. Best case, I want to be able to cash out 100% of my money so I can use it again on another deal, okay? And then there's the bad part of Jersey City. For you guys who don't know, it's called Greenville area, Bergen Lafayette area. All those areas are going to change, but the income in that area is still very low. It's like $50,000 a year. That's below median income, median income being 72. Okay, so to me, anything below median income by like 20% is a C market, and anything above it by 20% is an A market. That's my perspective. There's no like data on like who came up with those rules. That's just my perspective. Let me finish sharing with with you guys this stuff first. Okay, so when I look at Jersey City, Journal Square is kind of like emerging, but let's say Greenville to be more specific. It's a low income area because it's only making like $50,000 a year, if that. So in that area, my ideal strategy is cash out money. I want to be able to buy and cash out. Okay, but worst case, break even. You guys follow that? Because why would I do that? The reason why is because to me, Jersey City as a whole city is gentrifying. Okay, and because the whole city is gentrifying, break-even deals today, 5 years from now, is going to be cash cows. You guys follow? So, questions in regards to that before I continue? Go ahead.
I think you mentioned Jersey City. For what I know, co-op, maybe also condo, we cannot cash out. For Jersey City, it's like there are many buildings, apartments.
Yeah, I wouldn't buy condos in Jersey City. So you're saying you would buy a condo and refinance? Is that what you're saying?
Yes, so my question is that if you choose Jersey City, but they mostly just have condos or co-op, but banks don't allow to cash out those.
No, that's not true. I mean, if they're willing to lend you money on a purchase, they're going to be willing to lend you money on a refi.
But as far as I know, co-op are not allowed, but condo maybe.
But if they're willing to lend you money on a purchase, they're going to lend you money on a refi. Because if they're willing to lend you a loan, they're going to be willing to lend you on a refi. Okay. So I have experience with condos in Jersey City, Journal Square specifically, that I got for like $150,000.
Wow.
Okay, and this was only like 3 years ago, at most. Okay, today I could refi them easily for like $300,000. They're still cheap right now. They're still really cheap. If you think it's expensive right now in that area, it's not. It's cheap because you gotta look at like Brooklyn, the downtown area of Brooklyn. It used to be cheap, and now it's like $1 million properties. You know, but again, those are different games.
So if you wanna to cash out for your condo, so
you can cash out on anything. You can cash out. You just gotta find a lender that's down to do it.
You have to find the like special lender.
It might be. I don't know who you talk to.
Because I talked to like Bank of America.
Yeah, so they might not even, it might be an internal rule with them where they're like, we don't do condos or we don't do co-ops. Mm-hmm. So it might be an internal rule. I don't deal with them on refis to even know that rule exists.
Thank you.
No problem. There was any other questions? Go ahead.
So what was your definition of cash out then?
Cash out is like when you refi, you're not only taking 100% of the money out, but you're also putting $50,000 or $100,000 in your bank account.
Okay, so it's just a cash out refi, right?
But cash out meaning cash is also coming out, like additional cash.
Yeah, understood.
Yeah.
But it's okay to leave equity in your property, right?
Yeah, there's no problem with that.
Yeah.
It's just like, for example, if you have to look at your game, you know? Like if your game is, hey, I want to make $50,000 on every refi because it's gonna be more helpful for you to run a successful business, then it's easier to find those opportunities in a C market versus an A market. Okay, like so I'm really into the game of what's called markets because I don't like to work really hard to find a good deal. Do you follow what I'm saying? Right? Like, so when I first started this business, this strategy specifically, I was buying in Elizabeth, New Jersey, I was buying in Newark, New Jersey, and Jersey City. Okay, and at that time, everything was like every 3 family was like 200,000, 300,000. Okay. But let me give you the numbers. Everything was like 200,000, 300. Let's say it's 300,000. But each unit was only renting out for 1,200. Right? So to me, 300,000 off of the 6% rule of interest is $1,800 a month. Have we got that? And so if it's making $3,600 a month, it's fully able to pay for itself. Do you guys agree? And so if it appraises for 300, that means if I want to do the break-even model, right, I gotta be in it for 210,000. You guys see that? Because that's 70% of 300,000. And at that time, it was easy to find $210,000 deals, but it was harder to find $100,000 deals. But you can still find it if you play in the area. You follow? Like if you have your eyes in the area, and that's all you did, and that's the only market you played in, you're gonna eventually run into some. Do you guys agree? Because your eyes are in the area, and you start talking to people. Next thing you know, I got this deal, 150,000, Nick. Do you want it? Okay, or 100,000. It needs $75,000 worth of work. Do you want it? You guys follow? And then so if you focus in an area, you'll start to see it. Today, those same deals, it's very interesting. Those same deals are worth, let's say Newark and Jersey City, 3 families. They're worth today about 600,000. Would you guys agree?
Yeah.
What's their rent? What is their rent today? Is it 2,000?
4,500.
Is it lower or higher? Lower or higher?
It's like 3-4 grand.
It's let's just be conservative. Per unit.
2,200.
Yeah. What do you think it is? Yeah.
I thought it was like 1,800.
1,800. Okay. Let's say it's 1,800. Let's say it's
I think
1,800.
the Ironbound's a little bit higher.
Ironbound's like 2,400. Okay. Let's say let's just keep the number simple. Let's say it's 2,000. Okay. If it's 2,000 per door, that means 3 doors is 6,000 a month. Correct? So if you buy it for 600,000, mortgage payments are 3,600. It still can pay for itself. Am I right?
Yeah.
But I don't want to have money stuck in the refi. Would you guys agree? Because the refi is going to be 75% of 600. So whatever that number is something I would buy for. Do you guys follow? So what's the refi at 600,000? It's like it's 420. Right? Would you buy it for 420 if it's making $6,000 a month? The answer is yeah, I would, because I would get all my money back, and mortgage payments are going to be about $2,400, right? $2,500, and I'm making $6,000 a month. Do you guys follow?
Yeah.
Okay. Questions? I want to just talk about, guys. Questions?
Keep going.
Going? You guys are getting this?
Yes.
Okay. So there are deals out there right now, guys. There's always deals. It's just that when the market crashes, there's just more of it. It becomes easier. But don't wait for the market to crash to buy. Okay. If you run into a deal that's 4,200 and it's making $6,000 a month and you don't want it, just call me. I'll buy it. Okay. Yeah, we're constantly buying. It's because even if the market crashes down to, let's say, 200,000, and I just bought that deal for 420, it's still making me money. Am I right? It's still making me what, like $2,000, $3,000 a month. Okay. And now that the market's 200,000, I'll just buy more. Right? I'm using commercial lenders to refinance all my properties, and because of that, there's no limit to how many I can hold. Okay? We're good so far? All right. So, go ahead, Sal.
When you're talking about the market crashes, do those commercial lenders start not lending anymore?
Yeah, so what's really going on there, right? Back in 2008 and 7 crash, when you look at the banks, you're looking at the big banks. You're looking at like Wells Fargo, Bank of America, things like that. And they were the ones that lent out the majority of the loans during that time. And because of that, when the market crashed, or that wasn't a market crash, that was a bank problem. They underwrote bad loans, and then because of that, they were scared to originate new ones. But just so you guys know, at that exact time, there was still hard money lenders lending 100% financing if you just knew who they were. They never go away because that money is actually done by private companies. They're not the big brand name banks, okay? At that time, I was brand new to the business and I was borrowing money from a company called Rehab Financial, okay? Rehab Financial is based out of PA, like, I forgot what part of PA. It's like near Philadelphia, King of Persia, PA. And they did 100% financing for purchase and renovations, and they charged me 4 points and 15% for the year for purchase and renovate. Okay, and think about it. That's very high. 4 points is 4%. So if I'm buying something for $200,000, I gotta pay $8,000 to be able to get that loan. And the cost of capital was 15%. That's more than 1% a month. You guys follow? But the deals at that time was I was buying a 4-family in Jersey City for $200,000. Okay, I already knew it was a 4-family. That means $1,000 a month, right? So it's gonna rent out for $4,000 a month. Everybody follow that? Mm-hmm. Let's say I was paying 12% a month for the money that I was borrowing. If it's 12% a month, that means 1% a month I'm paying. If I borrow $200,000 at 1% a month, how much is that? $2,000 a month, right? But how much money is this thing cash flowing? $4,000. You guys follow? Yeah. So even if I held that hard money loan, if I wanted to, for like 10 years, it could still pay for itself. Do you guys follow? Like it wasn't like I bought this thing and every dime and dollar of the rental income is going into my pocket. Okay, it wasn't like that. It was, I'm looking at this deal, it had 4 units, I can rent it out for $4,000 a month, and the cost of capital is gonna be $2,000. And so it's more than capable of taking care of itself. At worst case, worst case, if it only made me $500 a month, I was still making $500 a month without doing any work. Would you guys agree? Okay, and I used to buy these things with this lender just to get in the deal. So there's a game. The game is you have to buy. Okay, and the lenders lend differently based on just the game of buying. And then once you're in and you buy and you own, there's different lenders to do what's called refis with. Do you guys follow? Okay. In terms of buying, I don't care as much for the cost because it gets me in the deal. Okay? And if you have your game down, and when I say your game down, what it means is you know how to renovate the property, you have crews to do it, you know what lenders to already refi with, then the biggest bottleneck you have is now money to acquire properties with. Would you guys agree? Mm-hmm. Right? And so the way I looked at it was, I don't care how expensive it is, as long as I can buy as many properties as I can buy. Do you guys follow? Like my 100% lender was very expensive. Of course, I wanted to be able to pay for itself too, but my lender was very expensive, and I was willing to pay 4 or 5 points at 50% interest to acquire 10 properties at one time, versus just 1 at one time. You guys get what I'm saying? Because here's the thing, guys. You can use your money and buy 100% cash, okay, and save on the cost of points, hard money cost, and all this stuff. But what you're missing out on is the opportunity to acquire buildings. Okay, the buildings is the real value. See, when I got into Cashflow, I thought it was just cash flow. I thought I was just making like $4,000 a month, $5,000 a month per property. But what happened that really made me a lot of money in this game is the city changed. Okay, the properties went from 300,000 to 600,000. Jersey, in Jersey City, Journal Square, downtown area, properties there used to be just 200,000-300,000. It went up to $1 million, $2 million. The city changed. Okay, and I didn't know that. I wasn't expecting that. And when the city changed, guess what also changes? The rent. But so do the taxes. But it all went up, and it was something I didn't count for. And that's why after that, going through that experience, I learned like, I just want to buy as many as I can buy. Just buy as many buildings as you can buy, and then allow them to change, allow them to appreciate. Don't count on it, but allow them. And even if you buy in the wrong market or in a declining market, as long as it's paying for itself, it doesn't matter. Because 10 years from now, or 15 years from now, who's paying for that? It's not you, it's the tenant. The tenants are paying for that. It's not you.
I have a question.
Go ahead.
For your Jersey City property, when you were, so it cost you $2,000 a month.
Yeah.
But you said there was also rehab.
Yeah.
So before you had tenants in there, you already.
So the property actually had 2 units that are rented,
Okay.
and the other 2 was empty.
Okay.
So I already had enough tenants to pay for itself, and they also gave me money for rehab. It was like a $50,000 rehab, and so they gave me money for that. And once after renovations and everything, it became like a $400,000 property.
So you didn't have to, so plus the mortgage, because
Yeah.
you were collecting rent, right?
Yeah.
Plus the mortgage, plus whatever your land taxes were.
Yeah, I don't care about any of that until I do the refi, because like
Well, I'm just asking, how do you carry it during that?
so I just don't pay for it.
So the loan covered all of that, is what
So all I had to worry about paying was the hard money lender per month. So the $2,000 a month. Once I got the loan, all I cared about was just paying them. Like you don't have to pay your property taxes. It's just that you should before they sell it. You guys follow? Okay. So I have the ability to borrow them. Okay. You should before you sell it, because if they sell it and then somebody buys it and then they do foreclosure on you, then you lose the property. Okay. But that takes at least 2 years. Go ahead.
Just now you mentioned to like get as many properties as possible, get buy multiple houses at the same time, which is a good idea. But it may be the ideal situation because it's very difficult to like have perfect timing to get a loan for multiple properties. Because sometimes, like if you want to close one property, but you have some issues, there could be like a few months gap if you want to get multiple loans.
I haven't experienced those issues that you're talking about. To me, I buy properties, I refi all the time, and I haven't had an issue with it. They just care about their deal that they're funding. They don't care about me. They don't look at me at all. They look at how much money does this property cash flow, and what is it appraised for. That's it. I think you're looking at banks not looking at you, right? Whereas my bank is not looking at me. They're looking at the deal. When I say that, they're not looking at my financials. They're looking at how much money does this property produce. You follow? So it's more commercial. Go ahead.
Could you just clarify that 6% rule
Yeah.
that you use to determine whether to buy or not?
Okay. Oh, you want me to clarify that?
Yeah,
Okay.
I didn't quite get it.
It's actually like $500 a month, right? But the way I did it was I just took 6% and I multiplied it against 100,000.
That's the purchase price.
Yeah.
Okay.
Okay. It comes out to be like $6,000, right? And then you're supposed to divide that by 12. So it comes out to actually be like 500 per month, because there's 12 months in a year, times what 500 is $6,000 a month. I mean $6,000 a year. Would you guys agree? It's something like that, right? So what I did was I just assumed that it was $600 a month instead of $500 a month payments.
Okay.
That's it. And so if I look at it, for every $100,000 I borrow, and I'm paying $600 a month, so if I borrow $200,000, how much am I paying? $1,200. I'm looking at if I'm buying something for 300,000, how much am I paying? 1,800. So it's just a rule that I came up with, so that way when I look at properties, I know what the expected mortgage payment should be.
And that's on the refi?
Yeah,
Right.
that's on the refi.
Okay.
Yeah, because no one's paying 6% for a purchase. I mean now they are, but back then they weren't. You got it?
Yeah.
Chuck, what's up?
So you mentioned not paying your property taxes, right?
Yeah.
I just want to know if I'm the only one that's crazy enough to do this.
Yeah.
Yeah.
Do you ever just look at like 20, 30 properties and go, if I just don't pay taxes this quarter, I can pay cash for this flip?
Yeah.
Hold, then you pay them off when you sell it and make a bunch. Man, I don't pay my PSE&G bills sometimes for an entire month because that's like an extra 50 G's.
The only reason why
Just buy something and flip it and make more.
the reason why I don't focus on it is because I know that by the time I do the refi, the title company's gonna pull the taxes. They're gonna see, oh, Nick owes this much money on taxes.
Yeah, I mean, it doesn't affect your credit.
Yeah,
Who cares?
exactly. You know,
It's basically like free money.
so that's the only reason why I don't care about it. I just focus on, hey, let's go after, because it's too much babysitting. If you do like, there's a point where you do too much and you don't care about that little detail, because you know you're gonna cash out before 2 years anyway.
Maybe next quarter.
Let's say I get a property on contract at 70 cents on the dollar.
Okay.
Is there a holding period?
Purchase and renovations, right?
Yeah.
Okay.
Is there a holding period?
Typically, it's really so banks don't like to refi unless it's you've held it for at least 6 months.
And that's like a rule?
Yeah, that's an industry rule.
Okay.
Actually, to be more clear, they can do refis before that. It's just that they can't do a cash out refi. They can do what's called a rate and term refi. Okay, where if you want to go to a lower rate and change up the terms, they can do that. Okay, but if you want to do a refi where you want to be able to cash out money, it's at least 6 months. Go ahead.
I have a question regarding actual interest rates for refi. Like back then, the interest rates were higher and they were going down. So doing a refinance probably made sense. Now it's the other way. Interest rates are going up.
Yeah. So I would do right now. I would do ARMs. They're five-year ARMs. 5-year ARMs are still very competitive right now. Like people hate doing refis because
adjustable rate mortgage, right?
Yeah, ARMs are adjustable rate mortgages. Like people hate doing them because they want to know for the next 30 years what their payment is going to be, right? And I get that, but I will tell you that rates change all the time. Like right now, we're at a period of rates going up. 2-3 years from now, 2-3 years from now, the rates are going to go down. So it's like it's a game of panning out. Exactly. Go ahead.
Even fixed rates can change?
No, fixed rates don't change. But what I'm saying is the industry rate changes. And so learn to just wait, like play with the industry. If you go into you type in 30-year mortgages and then put the word Fred, you're gonna see this. There's a company out in St. Louis that keeps track of all like the data of the country, pretty much every data set, and they'll show you a chart of what rates were for the last like 100 years.
When I started in real estate, interest rates were back in the late 70s, or well, no, in the 80s. 16,
was normal.
Yeah.
So 8% is 6% now is a
You
steal.
could buy a 3-family house for
$3,000
$80,000.
for the house.
Buy a 3-family.
You know what I mean? Like-
It's all around the
Let me move along, guys. Let me move along. Okay, so I wanted to share you guys with the money stuck in the deal, break even, and cash out strategy because it's all BRRR. You know, this is still BRRR. It's just that you have money stuck, and this is still BRRR. It's just that you actually get paid when you refi. My point with this segment was that it's easier to do these types of refis in a C market. Okay, and if I was to tell you how to find a C market, the way I would do it is I would go on Google tonight, type in median income map for the United States. Right? I'll go to the U.S. Census has it, and then on the U.S. Census, let's say you find the problem is you're gonna get a median income map for the whole country, right? But you need to find the median income for the state because you have to look at the state and then compare how different it is from the state median. You guys follow? Because if the state median is like 50,000, and the median income for that town you're looking at is, let's say, 50,000. Just because it's 50 and 50, it's actually a B market because the cost of living there is different. Whereas 50 in our area could be considered to be low income. Do you guys follow what I'm saying?
Yeah.
So you can't measure it against our 50 or our reality. You have to measure it based off of the state. Okay? Because I invest in Philadelphia and also New York, and the numbers are totally different. So like for I forgot the median income for Philly, but a big part of Philadelphia is below like $35,000. Okay, and I think the median there is like 52, something like that. So 30 something is well below median. Okay, and then 70 and up in a way is above median. It's A class. Okay, so be mindful of that. But yeah, so for me, based on my experience right now, it's actually really easy right now to find cash out deals in Philly. Okay, it's really like the reason why is because Philly is such a big city, and even though it's called Philadelphia, it's the size of like the whole county of Essex County, you know. And so you think like when you say you invest in Philly, it's like what part of Philly? Because it's as if it's this whole county, you know. But if you don't want to go down to Philly, and I'm not saying that you should, and you are okay with doing break even or money stuck in the game deals, there's a lot of them right now in New Jersey. Okay. I will also say the market's changing right now, and what I mean by the market's changing is realtors now are getting less offers than ever before. Would you guys agree?
Yeah.
They used to get like 20, 30 offers on a deal. We flip houses as well, and so we used to get 20, 30 offers on a deal. Now we're getting like one. Okay, and so it's scary because it's scary because, you know, depending on how many houses you have in the market, if you're only getting one, you just want to, like, even if it's a lower offer than what you're asking for, you want to get out, because the last thing you want to do is get stuck when it gets to the point of no offers, and now you're begging for offers, you know. But my point here is, if you were to look at deals today, do not be afraid to make a low offer. Okay? Do not be afraid to make a low offer today. The reason why is because there's the multiple offer game is now gone. You might actually be the only offer today. Okay? So don't be afraid to make offers. Don't be afraid to make low offers. And there's a gentleman that said this, something that's really famous, in that he said, if you are not embarrassed at the offer you make, it's not low enough. If you're not embarrassed, it's not low enough. It's real. It's real. Okay? So today you might be the only offer. Okay? And if you want to be able to get even like lower offers accepted, like lower than your lower offer, you have to learn to look at what's called motivation. Okay? Meaning, like, I buy a lot of stuff on MLS. Like I said, I'm lazy, right? What does that mean? That means that the MLS is a system that realtors use to sell houses. And if you have access to the MLS, you can see some details that you couldn't see without it. You would see how many days a property's been on the market. You know, if the normal for the market is 30 days that things move, and you're looking at things that are like 60 days or 3 months on the market, their motivation level now is very different. Would you guys agree?
Yes.
Right? You can also see things like how many times a deal fell out of contract. Right? It went under contract and it came out, it went under contract again, and every time it lowers its price. Those are like the motivation indicators that we look for. Okay? That's if you don't want to do marketing. That's a way of getting great deals. We buy a lot of stuff like that. Now, if you want to get into the game of marketing, okay, that's a totally different course. I started off with bandit signs, okay, those yellow we buy houses signs, those yellow ugly we buy houses. You guys seen them before, I'm sure. They really work. Yeah, you never see them. they really do work. You can also buy a list of foreclosures. That list is very small right now, but it's gonna grow. It's gonna grow exponentially probably within a year from now, because a lot of unemployment, a lot of layoffs are going to happen probably at the end of this quarter. Okay, and so we won't see that hit the books until like next year. You can do probate marketing. You can do. There's a ton of ways to do marketing. I would tell you the secret to marketing or to lead generation. The secret is every one of them work. Every strategy works. Okay, like if you apply a strategy, stick to it until it works. A lot of times what we do is we'll apply a strategy and then we jump to another strategy because we couldn't get it to work. It's the reason why it didn't work is because you have something off. It's not that it doesn't work. You guys follow what I'm saying? It's just a variable is off. And if you stick to it and experiment with changing variables up, you're gonna see that it works. So every marketing strategy works. So the way I would say it is identify who you are. Like if you like doing cold calling, then play that strategy. Don't do bandit signs unless you hate cold calling. Like don't do something that you don't like to do just because you know someone else does it and it works for them. Instead, apply the strategy that works for you. You guys follow? Okay? So identify who you are and play that strategy. I hate doing direct mail. I hate answering the phone. So what I got really good at is the MLS game. I got really good at talking to realtors, negotiating with realtors, realizing that they don't, at times, like my offer isn't going through because the realtors decided not to submit my offer. And even though by law, they're supposed to submit all offers, come on, there's days when I submit an offer and there's no other offer for 6 months. But the day I submit my offer, there's another offer. You guys see what I'm saying? It's like I've seen it enough times to know that it's a game, okay? And but if you point it out that they're messing with you, then they're never going to submit your offer, right? So you have to learn how to play the game. You guys get it? Like sometimes I'll submit a high offer just to get it in, so that way we go into attorney review, and then during attorney review, that's when I renegotiate the whole deal. Right? Because they're not willing to, because the realtor at times are not willing to face their seller and say, oh, I promise you I can give you this thing for $600,000 sold, but this guy wants to make an offer for $400,000. Do you guys get it? There's that game. So it's an ego trip for these people, and you got to know that. All right. So our marketing strategies work. Lead generation, can come in any direction. Just make offers. Don't be afraid to make low offers today. And as for renovations, if you're brand new to the business, I recommend you do what's called light renovation deals. Houses that don't need that much work. Okay. The reason why is because when you enter the game of renovations, you're going to learn that this whole business, the hardest part is actually getting a great contractor that's not going to scam you. Yes. Okay, that's the hardest part of the whole game. It's not even buying great deals, right? It's not renting it out. It's actually the contractor. Okay, and so if you're brand new to the business, I recommend looking for a management company that manages properties in the area that you are looking to buy. I would ask them how many properties they manage as a whole. So let's say they say like I manage like 2,000 doors. Okay, then from there ask them how many properties, how many of those 2,000 are in this area. Right? That's very important to me because they can manage a lot, but if they don't understand how to rent out properties in my area, they could potentially put in a bad tenant for me. Would you guys agree? Yes. Yeah. Different marketplaces have different kind of tenants. Like low-income areas, people are not going to have great credit. Okay, but it doesn't mean they're not good people. Whereas high-income areas, you would measure more on credit. Okay, so that's some question I would ask them. I would also ask them, can you do renovations for my properties, like turnover renovations? And the reason why is because I would then hire that management company to do the renovations for me. You guys got that? Was there a question? Okay. That's how I would do it. They're a big company, they manage a lot of units. Two, they have constant cash flow coming in so they can handle expenses. and then 3, they probably already have on staff contractors that do work for them, that do turnover. And so since you're gonna be buying, and since you're gonna probably even let them manage it, you might as well ask them if they can do that for you. And even if they don't manage your property, just like tell them, look, I'll pay you guys at $500 or $1,000 on top. Because the secret is, it's not about just saving money, but it's more about the renovations actually getting done. Right? The renovations actually getting done. Go ahead.
What percent are you paying on property management?
We have like a guy that we kind of work with for a long time. We kind of helped him build out his whole business, so he doesn't charge us that much. He should only charge us 5%. But like, I'm willing to pay 10% in an area that I don't do any business in as of yet.
Right.
Yeah.
Yeah, because I was going to comment, a lot of times on the renovation, they'll add another 10% on top of the price. That really
Yeah, I don't
costs.
mind that at all.
Yeah,
I just
no,
care
it's
about,
fine,
hey, it's
as
gonna
long
get
as-
done.
Yeah, as long as it's good quality work.
Plus, you gotta be aware of this. Every expense you're gonna incur, okay, for a property, meaning like, so let's say the renovation is $10,000, and the property management company is gonna tack on 10%. That's $11,000, right? So if it's $11,000 renovations, I would just discount the offer by an additional $1,000. Do you guys follow? So we're always at the 70-cent rule. It's like I'm never losing more money. Okay? So, and you're gonna get really good. You're gonna get really good at figuring out repair costs and things like that. But in the beginning, you have to kind of like just rough it as best as you can. Okay? And this is how I would do it. Put a property under contract. From there, find a management company that qualifies the game, that fits like the profile of what I just said. Ask them to go look at the renovations. Ask them to go and tell you what the cost of renovation is going to be during your due diligence period. Typically, when you buy deals on MLS, you have a 14-day due diligence period. If you buy it from wholesalers, you do not. Okay, unless you declare on the contract that you have a 14-day due diligence period. You guys got that? Within that 14 days, get your contractor to go out there and give you an estimate. From there, as long as within the 14 days, you can renegotiate if need be. And if you need more time, ask for more time before the 14 days is up. Don't wait till the last minute and ask. Ask as soon as you can. Okay? And I've renegotiated deals that we had in a contract for like $200,000, and after I sent my contract out, goes out there and things like that, we had to renegotiate down to $100,000. Okay, and they've accepted these. They've accepted those discounts. Okay, go ahead.
How much time would they allow you to extend?
It's easy. Ask, right? And if they say no, you say, okay, I'm gone. I'm out.
I write it into my contracts, an extension right away anyway, if it's so many days, and you can't even trust you're gonna get a contractor out there to take a look at this.
That's true, yeah.
So.
Well, so Nico, the answer is like, you can't assume that they're gonna always give it to you, but don't be afraid to ask. Okay, so like typically when you work with realtors, they only give you 14 days. But if I actually need more time, I will email everybody as a whole. I do everything through like email or text. I don't like to talk because you can't prove that. Plus, I don't like to talk to anybody. But that's another detail. But I do email, and then I don't do anything else until I get a yes. I don't move on to any other stuff. Because what happens is, as soon as you say that, you're declaring something to the bank or to the seller. You're declaring, if I don't get this, I might bail out. Do you guys follow what I'm saying? By the way, I'm not a lawyer. I'm just telling you. I'm not a lawyer, not an accountant. I'm just telling you that's my experience. So when you ask for these things and if they say no, or if they don't, like let's say it's 14 days and you're in the 10th day, so you have 4 days left, and you ask for a 14-day extension that day, and they don't reply to you for like a week, what happens? So what happens automatically is that you still have that time of 7 days. It's as if they reply to you 7 days from now and they say no, you can still bail out, even though it's out of your window of 14 days. Do you guys follow?
Because they technically didn't say no.
Yeah, exactly, and they didn't respond either. So they become unprofessional. We've sued a lot of people like that. Okay, no, it's no joke. We sued a lot of people like that. We sued a lot of people for trying to, like they would say, hey, we're under contract for 30 days. because they're trying to crunch you to get everything done within 30 days, right? And then we make changes to the contract, and because of these changes, we need additional time to close. Okay, and they're like, no, we can't. We won't give it to you. But there's a law, and the law is as long as you're making every effort to close, and it's in reasonable time, you still have the right to close. So even though you lapse it, you could still get it. And we've sued a lot of people for that, and we won. A lot of people hate us because they would sell us really good deals, and then they find someone else that's willing to pay them $50,000 more, and then they drag out the contract so that way we can't close. Do you guys follow? Like they try to make the contract expire. So they're like, so they don't respond to us, like things like that. And then it's like we're past the window of the close, but by law you still have the right to close.
Yeah.
Go ahead.
How do you renovate if there's a tenant in there?
How do you renovate if there's a tenant there? There's two ways of doing it. Like if it's not major renovations, it's very reasonable renovations. The tenant actually loves it if you renovate it, right? But if it's like really, really crazy renovations, you can ask them to move to a different unit that you have in the property, or you can just let them know that you're gonna renovate the property, and if you don't mind moving to the building or something like that. We try not to, typically we don't renovate unless they move. Typically we don't renovate unless they move. But like, if it's a great tenant, and for somehow we know that they're a great tenant, we would renovate it. But like, if it's like a leak or something, of course I'm gonna fix that. But we're not gonna do like major renovations, like new bathroom and kitchen. We're not gonna do that unless it's a new tenant, because that also increases the rent completely. Any other questions? Go ahead.
You mentioned the MLS before. It's like how you get like your niche as far as finding deals. So for a new investor, what are some strategies to build strong relationships with realtors that you want to work with in the area?
I'll talk to you.
Yeah, talk to this guy. Network. People that are at the real estate club, they're more open-minded to, because they know it's a game and they understand it's a game. So talk, just network and talk to the right people. Last question.
As you stated, foreclosures are increasing, and I foresee
it's just not enough yet. It's like there's like 200, 300,000. That's like BS.
What is your experience in foreclosures? Do you have any?
I have a lot of experience in foreclosures. I started with foreclosures, but that's next month's topic.
Oh,
yeah, that's next month. We're gonna talk about foreclosures, sheriff sales, and short sales, and REOs. Okay, so that's my recommendation with renovations. As you get more experience in the game, you're gonna start to find, like you're gonna get a good cash flow, maybe even killer cash flow. Then from there, graduate to getting gut properties. Okay, don't start off with gut. The problem with me when I first started was like I was looking at deals and I'm like, the gut property is like for 25 cents to the dollar, whereas the fully renovated properties is like 80 cents or 90 cents. Okay, so the price is drastically different. And I always thought like I should buy the gut, renovate it, and be in it for like 60, 70 cents, and I'll be at a steep discount. I'll save a lot of money. The problem is that is the correct assumption. The question is, what year will you get it done? You guys follow? It's not an easy thing to get into. It's gonna take you a long time, and because of that, you're in a way, you're saving money, but you're losing time. Okay, so that's like the bad trade-off that you're dealing with. I recommend going light, getting the cash flow going, get 10, 20 properties, 30 properties first. You can do this in under like, I would say 3 years. Okay, come on guys, think about it. It's unlimited capital and unlimited refinances. Why can't you do it, right? One second guys, right? Build that basket first. My goal is to, I try to make $300 to $500 a door. $300 to $500 a door after all expenses. Okay? $300 to $500 a door after all expenses. Now, some of you guys didn't ask this. There's this thing called capital expenditures. What that is, it's money set aside to handle big items that could break, like a furnace or a roof, things like that. Okay? when you're doing like small properties, like 1 family, 2 families, 3 families, 4 families, or even up to 10 units, you really can't calculate that number in, that percent in. It's typically about 10 to 15% of whatever the cash flow is. You can't calculate it in. The reason why is because when you calculate it in, you will never find a deal that would cash flow with that calculated in. The way I deal with that is this. Whenever I inspect a property, I try to figure out how soon do I have to replace this roof? How soon do I have to replace this furnace? If it's within 5 years, when I make my offer or renegotiate, I always ask for that discount. So if it costs me $10,000 to do a roof, in my initial offer, I am going to discount by $10,000. Do you guys follow? Mm-hmm. So that way, the day I buy, I can actually do a new roof if I want to. I don't have to, but I can. The day I buy, I can do a new furnace if I want to. I can replace literally every major item that needs to be replaced the day I buy because I already accounted for it, which gives me 10 to 15 years lifespan with this property in a way where I don't have to deal with any big ticket items breaking because I already accounted for that discount. Do you guys follow? Yeah. Plus, what you will learn when you get into the game more is that the whole market changes. The whole market changes in a window of 15 years. Meaning, you buy today, 15 years from now, it's double in price or triple in price, or it's below, super below market. But the point is that within that 15 years, there's so many opportunities to get in or get out. That, like, if it's on the top of the market, just get out. And if it's at the bottom of the market and you really like the property, refi, cheaper. You guys, it's crazy. Like, I'll give you an example. Assuming prices of real estate is the same, let's say it's like today versus 6 months from now, six months ago. The rates today, 9 months ago, sorry, rates were like 3%. And today it's 6. People are paying for the same property, same price, but mortgage payments are twice as much. Okay, now imagine this. Imagine you bought a property today, and let's say it's a great deal, and the cash flow, and you bought it today, and the rates are at 6%. 4 or 5 years from now, rates drop, refi. You guys follow? Mm-hmm. Right? Because the payments are going to go down half as much. That's how crazy. And the price is still staying the same. Payments are going to go down by twice as much.
We had a commercial piece up in Rutherford. A couple of sports medicine doctors bought it for, it was like $1 million something, and they never refinanced it. They were paying us 7%. We got another $800,000 just in interest alone. It was great. Yeah.
So, I have a question. So, if you buy a property, if you get a discount on the property on closing, do they give you like a credit on closing? Or
they can give you it for cheaper, or they can give it to you on credit. Depends on how you ask for it. Like with hard money, when you do an acquisition with hard money from the beginning, it's very easy. It's very easy because we are able to give you back money. Okay, but if you use conventional financing, it's very hard. Okay, so a way for us to give you more money is like this. If the rehab is, let's say, like $20,000, right, that you estimate, ask for 30. That's it. Just tell the bank that tell us that you're borrowing 30. Okay, and then we'll give it to you. So hide it in the rehab is what I'm saying. Go ahead.
So, for hard money lenders, are they in the business of if you fumble the bag, I'm gonna get the house, or?
Some people are like that.
Okay.
I'm not like that.
Okay.
Maybe I am once I experience it and I like it and I fall in love with it, then I become evil, right?
No, but I'm trying to see like what is why do you do 100%? Purchase? Like, yeah. What is your incentive for that?
So I found an investor that is giving me access to that money, and they're down with it. And so to me, it's kind of like we don't know our problems yet until we run into it. Yeah. Right now, they're down with doing that. But then again, they've also been doing this for like 10 years. And so I'm really using their money. And being in it for 10 years, they're down with it. I can't ask them why. I just say, why not? And just take the money. What I'll tell you is this. What I'll tell you is this. When you get into this business, you're gonna run into a lot of things that look weird. Things that are like unbelievable. Unbelievable to be like real. And you think it's like a scam.
Yeah, that's what
right?
I think.
And because of that,
That was my thoughts.
yeah. And I've faced those opportunities before, and I'm like, am I getting scammed here, right? So I know exactly what you're talking about, right? But what I would tell you is that the world is also really beautiful. Like the universe has things that it's kind of like laid out for us, and you just have to evaluate the risk. You know, there's a saying, yeah, if it's too good to be true, it probably is not true, it's not real, right? So just measure the risk of it. For me, I've experienced some crazy things that I just stop questioning it, and I just evaluate, hey, is there risk here? Am I gonna lose my shirt here? And if I'm losing my shirt, how much of it am I losing? You know, if it's reasonable, I'll take it, and then I'll see how it goes. You know, but it's a lot of fun once you get to see like how both sides work. I used to hate hard money lenders because I thought that, and there are lenders that are like that. But then I've also learned there are lenders that exist to go out of business. Okay, they exist to go out of business. There's a way to make money, lending money and going out of business. Right. Okay, and so there's so many games. Just look at your game and figure out who's dumb enough to lend you 100%, and if so, how much money can you get?
Got it.
But I will also say this, guys. The BRRR game is a game of falling in love with debt. The BRRR game is a game of falling in love with debt, because in essence, the more properties you own, the more debt you have. Am I right? But the more debt you have, the more cash flow you make. Okay? That's the big thing. I didn't understand this game in the beginning because my parents were always like, oh, you should always pay off your loans, right? And I learned the secret to doing that. The secret is, if you want to own 50 or 100 free and clear houses in your life, just buy twice as much as what you want, and then sell half of it, and use the gains that you make from the half to pay off your other properties. That's how it works. So my point is, if you want 50 free and clear properties, buy 100. Sell half. When the market's hot, sell half. Take that money and pay off your properties. That's it. You guys get that? It's beautiful. Okay. So I got into buy, renovate, rent out. I'm gonna go through this really quick. I'm sorry I'm running overtime, guys. Is it all right?
Yeah.
So rent out. The secret to renting out is this. I started renting out in Newark, Jersey, like the ghetto of like the New Jersey, right? And I learned that you can't when you look for tenants in Newark or Elizabeth or Trenton, things like that. I created. The people that rent in low-income areas look on Craigslist. Okay, they don't look on Zillow, and they don't go to a realtor to find them an apartment. Do you guys follow?
Yeah.
So you gotta put ads on there. And so, by the way, like if you want to figure out a cash flow for a property that you're looking to buy, you can create an ad on Craigslist. Okay, just don't put the exact address. Plus, we never advertise with the exact address. We'll do like a block. And we'll give them like the bed count, bath count, and the block. The reason why you don't want to put the exact address is because you don't want any break-ins, right? And put a price up. And if you get like 50 applicants messaging you within like a 2-day period, that means it's too low, right? And if you're getting just like 10 or so, then it's a good price. Another website you can use is called Rental Meter. I found out that Rental Meter buys its data from apartments.com. Okay, so Rental Meter is another platform you can use to figure out what the rent is for that specific property in your area. That's another way of doing it. And yeah, so low-income areas, I normally advertise on Craigslist, and then I would tell people like, hey, we're gonna run a background check, credit check on you, but we don't really base it off of that, and I really don't. I just tell them that I do that. The reason why I look is because I want to see what's going on. What you will find is that in a lot of low-income areas, the people that have bad credit, they're normally behind by like $50 or $100. It's they're behind by something that they don't know how to deal with or they mismanage. Whereas in an A market, if they have bad credit, they owe a lot of money. You guys follow? Because they qualify for a lot. Right. So it's a different reality. But it's the good people. What I look at mostly at credit is how long ago did it happen. Okay, like if it happened like last month, that's then if I'm putting them in as a tenant, it's gonna happen. I'm gonna be dealing with the BS from that. Okay, if it happened a few years ago, I don't mind it. And if it's a $50 or $100 item, I don't care about that either. Okay, so that's how I do low-income rentals and versus high-income rentals. If you get good at doing low-income rentals, high-income rentals is a joke. Okay, because they're easy. You just look at their credit, income, make sure it's 3 times the rent, right? Call their employer, ask them like how long they work there, how they are as an employee, and if you had a property, would you rent out to them?
They might have to disclose that information nowadays.
Just ask anyway. And by the way, like,
You can get in trouble for that.
I have. Is it legal?
No, you can only confirm like that they work there
Yeah.
and
Okay.
the date when
That's
they
it.
started. Yeah.
Oh, okay, I didn't know that.
Yeah, they're not.
They're gonna send you to HR, and that's all they're gonna say.
Oh, they said it to me. That's fine. But I haven't had a problem with it. Is what I'm saying. Like we don't even know that it's that we can't ask for it. So but they would know. They would tell us that. As for but the most important thing we look at is how long they've been working there, right? And if they were to change jobs, we would look at how long they've been in that industry. Okay, because if they're constantly jumping job to job, like 6 months here, 6 months here, as long as it's the same industry, we can understand. But if it's not, then we put them in as like a secondary pile. That's how we do rentals. Any questions?
You didn't. Sorry, you didn't mention Section 8. Do you not like?
We
that?
do everything. We do Section 8. We do everything. Yeah.
Yeah, I have a question. In theory, this strategy is very good, but if we apply this strategy, like if we buy like 10 houses, maybe 20 houses, like up to 50 houses, so how do you manage the houses? So it's very difficult if you
Manage what exactly?
manage your properties if you have like 20 to 50 houses.
I haven't had a problem with it. I just get money every month.
No.
we
It's
should
very
ask-
difficult to
we need to know
manage
the
the tenants,
logistics of it.
to get the rent.
Oh, who gets the rent?
Yeah, how to manage that.
Well, in the beginning, it was me. It was me. I was fortunate enough to start in a very tight area. Newark, Jersey City, and Elizabeth. They're all next door to each other, right? Once I got the hang of it, I just hired someone to just collect rent for me. And then slowly, I like if something breaks, I slowly, first it was my contractors doing the maintenance, and then slowly I had a maintenance guy. So you slowly get everybody you need. I mean, you could also go big. You can just go like 50 units or 100 units or 200 units right off the bat. We're going to be doing that presentation later in the year. But there's the small units and up game, and there's a big unit and up game. What I find is that that's how I started it. It was me, it was my friend that was a contractor, and a guy to help me find deals, and then slowly I just got more and more. And I was fortunate enough to have money through the refis to deal with BS as it came up. And the BS wasn't as bad as you would expect. Like if you get good at qualifying tenants, the game is really easy. Because that's, so contractors is probably the highest risk, then comes tenants. And then after that, it's just the refi game. And we kind of already talked about the refi game. The refi game is a really easy game. There are no doc loan lenders. There are full doc loan lenders. If you want cheaper rates, go with full doc. And if you want unlimited loans where no one cares about how much money you make, go with no doc. It's normally about 1% higher.
Repeat that? I'm sorry.
If you want loans where no one cares about how much money you make, yeah, you would go with no doc loans.
So how many types of, there's no doc lenders, full doc lenders, and
Yeah.
what's up?
And there's probably something in between that I don't even know about. But what I'm saying is there's a lender for everybody. There's a lender for everybody. And then there's the guy that wants the property. But any questions in regards to that? Everything I covered.
How do you find, I mean,
how do you find
I guess go to you, but how would you even find, like, how do you know if you're building with the correct lender?
How do you know what?
Building with the correct lender, like someone's not going to scam.
So there's a lot of scam artists on Facebook, right? They're like, I'm gonna lend you 100% financing and just email me at this address, and it's like at Gmail. Okay, look, if you do 100% financing, you should have a real email account, number one, right? Number two, like I would FaceTime them, right? Number three, they are normally registered with, there's a, I think it's called NJMLS or something like that. It's like a lending license it identifies who's licensed as a lender, okay?
Ask for your license.
Department of Banking and
My guys.
Insurance. Department of Banking and Insurance.
Yeah, so there's that number, okay? Like that's if you're suspicious, right? But if you're suspicious already, don't deal with them, you know? Like if you've never met them in person, they're probably a scam artist, right? Unless they can provide these things. So we deal with blocking a ton of these people like every day on Facebook. We also have like a Facebook group, if you guys don't know. It's called New Jersey Real Estate Investors Association. We have like 17,000 members on there. Go ahead.
I was gonna say, go to the expo and you'll make all the connections.
Yeah, there's a lot, yeah. There's a lot of them there. Any other questions? Before I get into house hacking, go ahead.
Yeah, I'm curious, how do you deal with a non-paying tenant in New Jersey?
Yeah, so in New Jersey, I mean, I would give them time, I would talk to them. A lot of times they actually do pay, it's just they're behind. Like they normally have to pay it by the 5th, they'll start paying by the 15th or something like that. I don't like to do evictions. I've done evictions before, and you do end up getting them out. The problem is that they end up trashing the property. They end up trashing the unit. And then they're also marked with having an eviction, so it's harder for them to actually find another place. What I do today is I try to get them to pay. Worst case, they don't pay. I talk to them and I tell them, look, let me help you out. I can't have you stay here, but let me help you move to another place. I can help you move. I can put down a deposit for you for the next property, things like that.
Cash for keys.
Yeah, cash for keys. So I actually pay them to leave.
Wow.
Yeah.
It's a write-off.
1,000, 2,000, yeah, it's better. Trust me, it's way better because when they trash a unit, you're paying that to renovate the unit. And it's normally like 3 to 4 times more. Go ahead.
I just saw one last week. There was someone that's selling their building in Jersey City, and their tenant got evicted, and I went over there to go check it out, and the place was an absolute mess. There was food that was left in the refrigerator for 2 weeks. There was literal dog shit on the floor.
Yeah.
Like they teared down the cabinets. They destroyed the entire place.
Yeah. That's gonna cost like just 10,000.
Yeah.
How is that not illegal?
That's on purpose?
Huh?
Is that on purpose?
That's on purpose, 100%.
Yeah.
Unless they live like that. Jesus.
It's not illegal. It's destructing property.
I mean, you can sue them, you can try to collect, but it's like.
You're suing someone that shouldn't pay you already.
Yeah.
Yeah.
Attorney bill.
Go ahead, Sal.
When you pay them to leave, you pay their new landlord, you don't give them the money directly.
Yeah. I mean, if I'm doing security deposit for them, I'm going to send it to the landlord. Okay? What happened?
How do you find a new landlord?
So I get them to find the landlord and a new place, and then I'll tell them, look, I'll cover security deposit for you if you guys want to leave.
So how that's benefited for you?
Yeah, they're out of my property. Yeah, they'll leave faster. It's out of my property, and potentially I can get my security deposit back one day.
So it seems like you have to have some money on the town on your side.
Oh yeah, 100%. That's why you got to do the cash out refi.
Reserves solve a lot of problems. Go to the new landlord, find a suspicion, and the old landlord's paying.
That's what I'm saying. I'm feeling bad.
Why do they not?
I just tell them I'm a nice guy. You know what I mean, look, people are dealing with bad tenants all the time. It's a normal thing. I haven't had a problem with it. I've learned this because my first deal ever I did, it was a foreclosure. The guy was behind in payments, and he needed this exact scenario. He needed money for a deposit, and I did it for him. So from there, I never had a problem with it. But worst case, cash for keys. We good with this? You guys can all do this? Any questions that can stop you guys from doing this? Go ahead, don't be afraid, go ahead. I have nothing to hold back from you guys because I don't currently do workshops right now, so I can share with you guys anything you want.
So in case when you have a hard money like loan, and if you do have default that, how do you get out? What's the safest?
So typically what we do, if you, let's say you had a hard money loan and you default on it, right? What we do is we call another one of our friends, right? And then we tell them to go break your legs. I'm just kidding. What we do is we have, so just so you know, everybody that's a hard money lender knows each other, okay? And they work with each other. Like, you don't get blacklisted. What you do is the loan has to be refinanced with another lender, okay? The reason why is because, and so there's lenders that do this all day long. Like, you can have a bad loan, and then let's say I have a loan with you, and we have a bad loan. As long as you're working and cooperative, we would get you to another loan. Okay, and then we would try to get you refied out. The reason why it works is how the community works is because sometimes the paper that the investors are giving us the money, they get upset with us, but the deal can still work. You follow? Like for example, you might not make any money, but if the deal works and it works out to completion, at least you'll satisfy the loan. Right? So our game is not actually to get properties. At least right now, that's not my game. Go ahead.
I just have a question about the refinance real quick, and you were talking about the banks don't like to refinance if it's been less than 6 months. But do you mean like I'm in a conventional loan and I'm refinancing before 6 months?
No, you could have even bought it for cash.
Oh, really?
Okay, yeah, and the lenders won't lend like the refi. It's a rule that the banks made with each other, right? They're like, you can't, like as a lender, if I issued a loan and you paid it off within 6 months, I can't make money as a lender because I haven't received any interest payments. Okay, and the lender, when they originate a loan, what they do is they pay their originator, they pay their loan officer, right? Sometimes the loan officers tack on points, other times they're getting paid within the loan. Okay, and so that's like an industry rule that they just made. It's like an industry understanding.
Yeah, yeah, they scratch each other's back.
Yeah. Okay. Any other questions before I get into the house hacking? House hacking is one of my favorite strategies.
That's actually what I was going to ask you about. With my first property, I'd like to get, to speed up the process. I'd like to use this W-2 I have.
Okay. So I'm going to tell you how to do house hacking. Okay. So now that you know BRRRR, right? If you can apply it with house hacking, this is how it works, right? So if you can find a deal where you can do break-even refis, or even cash out refi. Let's say break-even refi, right? Say find out 4-family, or 3-family, or 2-family, whatever. Not too big, not too small. The reason why I like to say 4-family is because with a 4-family, you can still do an FHA loan. Okay, FHA loans are loans that only require 3.5% down. So if it's like a $500,000 house, you don't have to put 3.5% down of $500,000, which is like what, like 15,000 or something like that, right?
No, but if it's multifamily for FHA, they make you still put they add like 5% per unit.
No, they don't.
No, that's multi. 4-family is multi-unit. 5 units and up is multi-family.
So it's 4 units and down.
Yeah.
I've tried the FHA like that and a conventional, and they, as a primary owner.
It could have changed. So it's 5% per unit.
You need to have practically 5% per unit.
No, I'm doing FHA. I just talked to FHA last 3.5.
So when I did it,
You can have up to 4 units FHA.
Oh really?
Yeah, 4 units FHA. You might have had a commercial unit. Yeah. No. After 5 and up is commercial.
This was 4.
Maybe your lender just sucks. I'm sorry.
No, they all have their own little rules when they.
Yeah, it could have been the lender. Work with John Palumbo from Freedom Mortgage. He's a killer at it.
Who is it?
John Palumbo. I'll give you his contact. So find a 4 unit. Make sure you can do a cash out refi or a break even refi. Ideally, the goal is to identify a property where if you were to not rent out 1 unit and live there, that it would not cash flow, would break even month to month, ideally. You guys follow?
Yeah. Mm-hmm.
So like if it's a 4-family, for example, let's say it's making $1,500 per month per unit, right? So that's $3,500 for 3 units rented out. Okay, that means if you buy something that's only gonna make $3,500 per unit, $3,500 per month, at $600 for every 100,000, you can only buy something that's like worth what? Let's see, 100,000, 600, 200,000 is 1,200, 400,000 is 2,400, right? So it's up to like 600,000. It's about 3,600. You guys get it? Okay. That doesn't include taxes. You still got to pay taxes. So if you wanted to include taxes, you got to buy it for less. Okay, that's one way of doing it. Another way of doing it is this is like for like a singles guys only. Okay, because your girl is not going to be happy. Buy a 4-unit, renovate the basement or the attic. You guys follow? Buy a 4-unit because it's an owner occupant and it's your house. Renovate the basement or attic. Okay, and within a year or 2 years, you'll get if you break even or cash out refi, you'll get so much money back. You can buy the house you really want. Like I tell my friends that are young and single, just buy 10 properties before you buy your house.
Yeah. True.
Okay, but the problem is they're like, my girlfriend wants to buy, and I'm like, yo, you got a girlfriend, it's too late for you. This is why it's a single guy strategy. This is the only time they can break the rules. Okay, so that's another way of house hacking. You can do like Airbnb and all that stuff with your properties. To me, it's too much work. Plus, cash flow is crazy, but I'm also working, so I might as well just work full time. You know what I mean?
You're already paying them.